Hey guys, and welcome to the fourth installment of my Vanguard 0 to 100k series, where I invest everything I make right here on YouTube. If you're new to the series, in the last episode we've reached a total of 36,791 in what was my best month ever. It's been a couple of months since then, so let's see how we've been getting on. If you could do me a favour and press that like button, it really helps the channel grow, and make sure you subscribe with notifications on so you don't miss the next episode. Shortly I'll be doing a total portfolio update of where I'm at across all of my accounts, which I think will be really interesting to see as I've just passed my 33rd birthday. So let me know if you'd like to see that in the comments down below. It's safe to say it's been a rocky start to the year so far, with the S&P 500 down 6% this month, 14% over the past 6 months, and almost 20% year to date. It's enough to have anyone feeling frustrated.
No! God, please, no! No!
With Interactive Brokers founder Thomas Peterfy saying he thinks there's more pain to come and expecting the market to bottom out around 3,300, 552 points from where we are today. Goldman Sachs data is predicting a further 27% drop if the Fed has to take a more aggressive route. The US market saw its sharpest day of decline since June 2020, where the S&P 500 dropped 4.3% and the Nasdaq more than 5%. And that was off the back of news inflation hadn't dropped as much as they expected, despite the hikes in rates. Troubling news for President Biden, whose approval rating fell below 40% earlier this year. With the national elections coming up in November, they will determine whether Biden maintains his slim control of Congress.
I got hairy legs that turn blonde in the sun.
Sachs crunched the numbers on their aggressive approach, and it's not great. If the Fed has to hit the economy hard enough to get the unemployment rate up to 5%, the S&P 500 would have to fall 40% to below 3,400. In a more severe scenario where the jobless rate has to hit 6%, the S&P 500 would fall 27% to below 2,900. That's almost 1,000 points from where we are now, and the dollar would rise 8%. That's not great news for us here in the UK, with the pound hitting its lowest level since 1985. It's a sign of US stocks getting even more expensive than they already are. And to top it off, our government is currently refusing to publish an economic forecast, hopefully coming soon.
In December, I'll be in Beijing, opening up new pork markets.
Interesting news to look at how the market is headed. If you're in it for the long term, it may just be water off a duck's back, but there we have it. So let's see how things have been going over the past few months and take a look at how my Vanguard portfolio is looking off the back of it. So here is how I've been performing over the past couple of months. So first, let's start with YouTube ads. These are the ads that will play during one of my videos. So in July, it was actually slightly higher than June at £336.72. Match betting, again, I did none, but I'm actually thinking about starting match betting soon. So I think I might start doing it even on a low level because it will show people how to make a little bit of extra money. You'll see the initial amount that I did in my week challenge, which you can check out on my other video, which was great tax-free income. So I'm definitely thinking about continuing that in the coming months. My affiliate income was $2,200. As you can see, a massive drop from $5,839 last month. And that's just because a lot of that was from the new tax year and people signing up for ISAs, which this time of year isn't as popular, but people are still doing it, which is fantastic. So I get a small amount when people sign up for an account. I'd love to try and increase that and keep that number upwards, so we'll just see how that goes going forward. Sponsorships, again, £1,000, which is fantastic. Thank you to my sponsors. Patreon was 266, which has dipped slightly, and that's just because I haven't been promoting it as much and trying to get as many people in. If you have found these videos useful and want to join the Patreon and join our community, then please come over and say hi. We always like to welcome new people, and if you've got any questions about investing, you can just ask me one-on-one, which is pretty great. So my total for July was 2,810, which is pretty mind-blowing that I can earn that amount. Yes, it's not 7 or 5,000 from the month before, but still pretty crazy. Moving on to August, the ad revenue dipped slightly, which is 267, mostly because of me going on holiday for a couple of weeks, which did take a big chunk of my time up. I'm hoping hoping now towards Christmas I can put more effort in and try and get some more videos out for you guys. Again, the match betting, hopefully I'll continue. Affiliates dropped again to 1,400 just because of its knock-on effect, and it does take time to be paid out, so some of that is going to just continue to drop off. But I'm hoping to keep it above the 1,000 level. Sponsors again was 1,000. Patreon again dropped slightly to 245, but still for the month I was at 1,959, which I'm really grateful for. So in total, how I've done from YouTube so far, I've made a total of £34,771.88. Now that's over 17 months. Again, at the beginning I didn't make any money whatsoever, so it's slowly catching up and balancing out. So on average, that averages to £2,045 per month, and my hourly rate has been £51.14, which is pretty crazy. And now it's finally getting to the rate where it equals my normal job. So it makes it more viable for me to continue doing YouTube. I'm hoping that I can maintain that. And things like the Patreon, it's not so much I'm trying to grab money, it just gives me more time to focus on doing YouTube. So I think now what I really need to do is think about other ways to generate money. I am thinking about building some software, but it is a huge commitment. On the flip side, I'm going to do some investing guides and also hopefully launch a course by the beginning of the year. And that will be my how to make passive income. Because I've worked with so many clients and helped people make passive income, I think it's time that I teach some more people. I am still thinking about my web design course, but obviously I've got such a small amount of people that want to do the web design course. I'm going to have to try and justify some of the times to do that one. But I want to make it all quite an interactive experience with a lot of feedback, so we'll just see how it goes. It's a massive time commitment for me, so I'm hoping it pays off, but you never know. So in this episode from the 2 months, the amount I have to invest is £4,770. So jumping into Vanguard then, here is how my portfolio is looking. And again, it's within a pension account because all of this income is in the higher tax bracket, so it's a no-brainer to get a 20% bonus on that cash. So that's why that number is much higher than what I've actually earned. So from that 34,000, I'm actually boosted up to 43,000, pretty much just because of the 20% government bonus. So in this tax year is 21,778. Now that's slightly lower because some of that YouTube income came into last year, so that's why, if you're wondering, the numbers don't match up. And you can see just in this tax year alone, I've had 5,400 in tax relief from the government. If you don't have a pension, it's well worth looking at. But remember, of course, I'm going to pay tax when I take this money back out. It's kind of a double-edged sword. Now you can only actually contribute 40,000 per tax year. So it's going to be interesting if I'm lucky enough to hit that balance, what I kind of do from there. So if we do 40,000, take away 27,223, that leaves us with 12,777. Now there's 7 months left of this tax year, but first we need to take away the 20%. So let's divide it by 100 and times it by 80. Then we get the 10,221. If I divide this by 7, we can see actually I can only contribute 1,460 per month going forward. Now I'm not going to look at that too much right now, but what I am going to do is just put in what I can, and then we'll see how close we get to the limit and then address it when it comes. So here's my investments overall. So I've still got the 3. I've got the UK fund, which is the FTSE 100. That is 14% of my portfolio and is down 292. We've got VV, which is a world fund. I might make a video addressing why I hold that one and not VWRL. That one's down £200 and is 15% of my portfolio, and the S&P 500 is at 16% and is minus £59. That's just because I've started this at the worst time ever, so don't worry too much. Hopefully, if your portfolio is down, this will give you some relief and think, oh, it's not just me. But you'll see I have a whopping 53.57% as cash. And that's because I'm waiting just to see what happens with the market over the next couple of months. And then I'm going to dive in and hopefully ride that wave off into the sunset. But we'll see. And here is my performance so far. So if we go for the month by month breakdown, which I think is the best one to look at, we can see in July there was massive swings and roundabouts here. So June I was down 1,100 and July I was up 1,244, which just shows you how much the market was swinging up and down. In August, I was up £127, and in September so far, I'm down 277. In the long term, I don't think this really matters, but in the short term, it would be nice to see consistent green numbers. And now in terms of my investments, you can actually see my return here. So my gross return, S&P 500 is minus 0.67, FTSE is minus 3.65, and the Developed World Fund is minus 2.53. And my cash, you can see, has actually made 0.79%. Because that's pretty good, because it does does pay interest on the account. So I do currently have £20,700 ready to invest. So I'm excited, weirdly, for the market to drop so I can start averaging back in. I'm probably just going to spread that money out month by month and just edge my way back into the market. So here is how they're looking on an individual basis. The UK fund has dropped quite significantly and it was making me think, ooh, is it time to jump back in? So that's one I'm quite tempted with at the moment, which I'm just deciding on. Let me know what you think about that one, if you think I should buy some more now. The All World Fund has dipped a little bit again, but again, it's still around the same kind of levels from when I previously bought. I would like to see another significant drop before I jump back in. And you can see the point here where I just decided to pause just to see what was happening with the market. Of course, if I bought down here and it came up here and then down again, yes, I would be up. So it's kind of swings and roundabouts. I could ride the wave up and down, but at the moment, I'm quite happy waiting for it to crash down and then jumping back in. The S&P 500 is a very similar story. Here's the breakdown of my portfolio. You can see I'm 46% invested, 54% in cash, and here's my geographical breakdown of locations. You can see I'm actually quite heavy in the UK. I am in North America, but because of my cash, it's all kind of leveled out. If I look over the past 3 months, it actually looks much more attractive, and you can see over the past 3 months, I've made 5.19%. But of course, that has cut out the loss that was just before that point, so take it with a pinch of salt. I think to me, the returns only really matter when I go to take the money out at the end. Being realistic, it doesn't really matter too much if I'm up or down now. I'd really like to just get as much money in as possible, so then when it's way up in the future, I think, thank God that I did that. And thank you guys for your suggestions and comments on the video. I do read every single one of them. If you get spam bots that reply to you, honestly, it's not me. I delete so many comments every single day, like 20 or 30 of them, but they just keep coming and coming. So I thought it'd be quite interesting to take a look at some of the comments I got on the last video and address them here today. Because it's something I've never done and I thought it would be quite interesting. So Kartik says, you mentioned holding cash because we might be headed for a hard winter. However, you can't withdraw cash from a SIP until like age 58 anyways. Can you correct me? Well, the thing I'm doing is I'm putting cash in because when I put the cash in, I get that government bonus and I want to hit that allowance for the year. I could keep that cash and keep it invested elsewhere, which in some ways, yes, you're right. I could keep the cash if I intend to do so, keep it in something like Chase, or some are even offering 2% interest now, and I could put it in right at the end of the tax year. But for me, I'm not too fussed. I just want to put it in for the series and just see how it builds gradually. Alexander said, I'm 33 and I work in Tesco, and last month I started my FIRE journey. It's incredibly daunting starting from zero, but I hope to retire around age 55. Your videos help to keep me motivated and on track. That actually means the world reading a comment like that you're actually starting, so thank you for that. Well done on starting, because starting is really the hardest part. It's all about starting, just compounding, and you will get there eventually. And Arcade Nation has put, I'm 35 and think I've missed a boat. No, don't worry whatsoever. Starting is better than not starting. Just start investing, growing your income, and just putting more and more in. There's loads of successful entrepreneurs that didn't even start until they were like 40, so I wouldn't worry about that whatsoever. I've had a few comments about smaller amounts, and I do have my beginner investing series starting soon, where I'm going to invest around £200 per month. That series will be coming in the next few weeks, so do stay tuned for that. Jamie said, great job, consider starting a SIP as I'm in the higher tax band myself. Would love to know how much of a faff the tax return is, as I'm just doing my ISA right now rather than a SIP. Well, yeah, I'll let you know at the end of the year when I have all of the hassle with it. I'm sure it's not going to be too bad because my accountant will help me with it and I'll probably pay him for doing so. But I'll let you know how it goes and I'll share any tips. Paul said, hi Chris, is the very strong dollar up 14% against the pound influencing your thoughts on investing in US funds? Is it a consideration? Yes, it is. And I'm sure you might have seen my video yesterday and said there's a huge problem with the S&P 500. The US market is very, very expensive at the moment, so whatever you pay, if the price shifts the other way, you could lose out. But I guess the other side of that is if you don't invest and you don't get the growth, it could be just as bad. I think investing is extremely hard at the moment, and I might do a whole video talking about this and just sharing my general thoughts on where the market's going. The British investor said, why not buy some government bonds, i.e. long-dated government bonds, if you're expecting a downturn? That is a good consideration. I probably think in the short term, I'm thinking of jumping back in. So as soon as it dips, I want to kind of use that cash to jump back in. I might look at them if they haven't got a lockup period, but I'm aware that with most bonds, I'm gonna have to lock it for a period of time. Adam also said ditch the S&P 500 and keep VV for diversification as there's too much overlap. I've actually got them both. I just want to see the comparison on how they do. I know they're super similar, but yeah, I might consider doing that one. I probably actually like the idea of keeping the S&P 500 because I just think over the long term, that seems to be how the majority of people have made so much money. Brighty Boy said, what's your opinions on the life strategy funds? That one I will save for an entire video. So thank you guys for watching this. Let me know if you do have any suggestions. Leave some comments and I'll reply to them in the next video. I'm trying to make it as transparent as possible, show you the ups as well as the downs and my whole journey. Again, make sure you subscribe because I will have that beginner one coming soon. And if you haven't already, check out some of these videos as I think you'll also find them interesting. Thank you guys as always for watching and I'll see you in the next video.